The US job market is very hot. 3 months in a row, the NFP has beaten expectations. Every single print is stronger than the forecast. What does it imply? With inflation rising nonstop, Fed rate cuts are basically off the table. Now, the market isn't asking if the Fed will hike. It's asking how many times and how soon. That answer will be revealed in this month's NFP. The report will be released on the 2nd of July at 3:30 p.m. Stay with me as I break down what the data could mean for markets and how to trade around it. Before I break down the upcoming jobs report, make sure you subscribe to our channel and turn on notifications so you don't miss any market updates and insights. The May NFP report continued to surprise the market with 172,000 new jobs added, significantly exceeding the market forecast. On the other hand, the unemployment rate remained unchanged at 4.3%, while the wage growth meets the market forecast, with the average hourly earnings rising by 0.3% month-on-month and 3.4% year-on-year. So how did markets respond? The upbeat jobs report boosted Fed rate hike expectations, lifting the dollar. Gold fell sharply in response to the dollar strength, while all three major U.S. stock indexes slid into the red on the stronger-than-expected print. Oil, however, was merely influenced by the report. The ongoing geopolitical tensions continued to boost the oil prices. To trade around the NFP release, you've got to watch the forecast numbers. Comparing these forecasts to the actual data gives you a clear picture of where Forex, commodities, and stocks could move. The upcoming June NFP is expected to come in slightly softer, with job growth projected at 114,000. The unemployment rate is forecast to hold steady at 4.3%, while wage growth is set to remain unchanged, with the average hourly earnings at 0.3% month-on-month and 3.4% year-on-year. So how could the market react to the NFP report? And what should traders watch out for as volatility kicks in? In a moment, I'll break down three key assets: the dollar index, gold, and S&P 500. So stick around for the full technical analysis. Let's start with the US dollar index. If NFP beats forecasts and exceeds 150,000, rate hike expectations will build and push the DXY toward resistance at 101.50. A weaker print below 80,000, however, could weigh on the dollar with support levels at 100.45 and 100 in focus. Now let's look at gold. A softer NFP could pressure yields and the dollar, boosting gold toward the $4,203 to $4,238 range. If the job growth beat expectations, gold prices could pull back, with downside targets at $3,939 and $3,885. And now, the S&P 500 index. A strong print is likely to pressure equities, pushing the S&P 500 index down towards support at 7,239 and 7,176. A weaker reading, however, supports a dovish Fed stance, potentially driving inflows and pushing the index toward resistance at 7,443 to 7,530. That's the full breakdown. Remember, this is just my perspective on the market and not financial advice. If you find this useful, let me know in the comments. Hit the like button, share it with someone who needs to see it. And don't forget to subscribe with notifications on so you don't miss the next market updates.